Hello dear students, I am Parveen Kumar, PGT Commerce, KVS. In today's video session, we shall take up session of chapter 4 Bank Reconciliation Statement of class 11th Accountancy. The topics that will be covered in today's sessions are meaning of bank reconciliation statement, need for reconciliation, causes of difference between cash book and passbook, favorable and unfavorable balances of passbook and cash book, preparation of bank reconciliation statement. Dear students, you have learned that the business organizations keep a record of their cash and bank transactions in a cash book. The cash book also serves the purpose of both the cash account and the bank account and shows the balance of both at the end of the period. The amount of balance shown in the passbook or the bank statement must tally with the balance as shown in the cash book. But in practice, these are usually found to be different. Hence, we have to ascertain the causes of such differences. It will be observed that a bank statement or passbook shows all deposits in the credit column and withdrawal in the debit column. Thus, if deposits exceed withdrawals, it shows a credit balance, and if withdrawal exceed deposits, it shows a debit balance or overdraft. Dear students, the learning objectives of today's session are: learners will be able to understand the meaning and need of bank reconciliation statement, identify causes of difference between bank balance as per cash book and passbook, preparation of bank reconciliation statement, ascertain the correct bank balance as per cash book and passbook. Dear learners, let us know about the meaning of bank reconciliation statement. A bank reconciliation is a statement explaining any difference between the balance shown in the bank statement or passbook and the balance shown in the cash book. Now, let us learn about the objectives of preparing bank reconciliation statement. It reflects actual bank balance position, detect mistake in cash book and passbook, explain any delay in collection of check, helps in finding out causes of difference between cash book and passbook. Now, let us know about different causes of difference between cash book and passbook. Timing difference. When a business compares the balance of its cash book with the balance shown by the bank passbook, there is often a difference which is caused by the time gap in recording the transactions relating either to payments or receipts. The factors affecting time gap includes check issued by bank but not yet presented for payment. When check are issued by the firm to suppliers or creditors of the firm. These are immediately entered on the credit side of the cash book. However, the receiving party may not present the check to the bank for payment immediately. The bank will debit the firm's account only when these checks are actually paid by bank. Hence, there is a time lag between the issue of a check and its presentation to the bank, which may cause the difference between the two balances. Check paid into bank but not yet credited. When firms receive checks from its customers, debtors, they are immediately recorded in the debit side of the cash book. This increases the bank balance as per the cash book. However, the bank credits the customer account only when the amount of checks are actually realized. The clearing of checks generally takes few days, especially in case of outstation checks or when the checks are paid in at a bank branch other than the one at which the account of the firm is maintained. This leads to a cause of difference between the bank balance shown by the cash book and the balance shown by the bank passbook. This leads to a cause of difference between the bank balance shown by the cash book and the balance shown by the bank passbook. Direct debit made by the bank on the behalf of customer. Sometimes the bank deducts amount for various services from the account without the firm's knowledge. The firm comes to know about it only when bank statements arrives. Example of such deductions include checks collection charges, incidental charges, interest on overdrafts, unpaid checks deducted by the bank, i.e. stopped or bounced, etc. As a result, examples of such deductions include check collection charges, incidental charges, interest on overdraft, unpaid checks deducted by the bank, that is stopped or bounced, etc. As a result, the balance as per passbook will be less than the balance as per cash book. Amounts directly deposited in the bank account. There are instances when debtors, customers directly deposits money into firm's bank account, but the firm does not receives the intimation from any sources till it receives the bank statement. In this case, the bank records the receipts in the firm's account at the bank, but the same is not recorded in the firm's cash book. As a result, the balance shown in the bank passbook will be more than the balance shown in the firm's cash book. Interest and dividend collected by the bank. When the bank collects interest and dividend on the behalf of the customers, then these are immediately credited to the customer's account, but the firm will know about these transactions and when record the same in the cash book. Only when it receives a bank statement. Till then, the bank balances as per the cash book and passbook will differ. Direct payments made by the bank on the behalf of the customers. Sometimes the customers give standing instruction to the bank to make some payment regularly on stated days to the third parties. For example, telephone bills, insurance premium, rent, taxes, etc. are directly paid by the bank on behalf of the customer and debited to the account. As a result, the balance as per the bank passbook would be less than the one shown in the cash book. Checks deposited or bill discounted dishonored. If a check deposited by the firm is dishonored or a bill of exchange drawn by the business firm is discounted with the bank is dishonored on the date of maturity, the same is debited to customer's account by the bank. As this information is not available to the firm immediately, there will be no entry in the firm's cash book regarding the above items. This will be known to the firm when it receives a statement from the bank. As a result, the balance as per passbook would be less than the cash book balance. Now, dear learners, let us know about differences caused by errors. Sometimes the difference between the two balances may be accounted for by an error on the part of the bank or an error in the cash book of the businesses. This causes difference between the bank balance shown by the cash book and the balance shown by the bank statement. Errors committed in the recording transactions by the firm, omissions or wrong recording of transactions relating to check issued, checks deposited and wrong totaling etc. committed by the firm, while recording entries in the cash book cause difference between cash book and passbook balance. Errors committed in recording transactions by the bank, omissions or wrong recording of transactions relating to checks deposited and wrong totaling etc. committed by the bank while posting entries in the passbook also cause differences between passbook and cash book balance. Now, we will learn about methods of preparing bank reconciliation statement. When debit balance or favorable balance as per cash book is given and the balance as per passbook is to be ascertained, favorable balances will be shown in plus column. When credit balance or favorable balance as per passbook is given and the balance as per cash book is to be ascertained, favorable balance will be shown in plus column. When credit balance as per cash book or unfavorable balance or overdraft balance is given and the balance as per passbook is to be ascertained. Unfavorable balance will be shown in minus column. When debit balance as per passbook or unfavorable balance is given and the balance as per cash book is to be ascertained, unfavorable balance will be shown in minus column. So, dear learners, these are different causes of difference between cash book and passbook. Therefore, a bank reconciliation statement can be prepared with the following balance: debit balance favorable as per cash book, credit balance favorable as per passbook, credit balance unfavorable as per cash book, debit balance unfavorable as per passbook. Dear learners, now we will prepare bank reconciliation with the following particulars. From the following particulars of Mr. Vinod, prepare bank reconciliation statement as on March 31st, 2017. Bank balance as per cash book 50,000. Checks issued but not presented for payment 6,000. The bank had directly collected dividend of 8,000 and credited to bank account but was not entered in the cash book. A check for 6,000 was deposited but not collected by the bank. Bank charges of 400 were not entered in the cash book. So, dear learners, we will prepare bank reconciliation with above said particulars. First of all, we will put favorable balance of cash book in plus column. In the point number 2, check issued rupees 6,000 but not presented for payment in bank. We have to adjust our cash book as per passbook. Therefore, we will add back in our cash book. Now come on point number 3, dividend rupees 8,000 received by bank on our behalf. Therefore, our passbook excess with rupees 8,000 and we have to add it back in our cash book to reconcile cash book with passbook. In point number 5, checks rupees 6,000 deposited into bank but not credited by bank in our bank account. Therefore, our bank account short by rupees 6,000 and we will deduct in cash book to reconcile with passbook. In point number 5, bank charges rupees 400 charged by bank but not entered in cash book. Therefore, our cash book is excess by rupees 400. We have to reconcile our cash book with passbook. So, we will deduct in cash book. So, dear learners, after putting all necessary adjustment in cash book to reconcile with our cash book with balance of rupees 57,600 of passbook. I hope till now you would have understood how we can reconcile cash book with passbook with favorable balance. Dear learners, now we will learn about unfavorable balance of cash book and passbook. However, businesses sometimes have overdraft at the bank. Overdrafts are where the bank accounts becomes negative and the businesses in effect have borrowed from the bank. This is, however, businesses sometimes have overdrafts at the bank. Overdrafts are where the bank accounts becomes negative and the businesses in effect have to borrow from the bank. This is shown in the cash book as a credit balance. In the bank statement where the balance is followed by debit or sometimes OD means that there is an overdraft and called debit balance as per passbook. An overdraft is treated as negative figure on a bank reconciliation statement. The unfavorable balance of cash book and pass will be credit balance as per cash book and debit balance as per passbook. Unfavorable balances is negative balance will be shown in the minus column of bank reconciliation statement. Unfavorable balances is negative balance will be shown in the minus column of the bank reconciliation statement. Now, dear learners, we will prepare bank reconciliation statement with negative or unfavorable balance with given particulars. On March 31st, 2017, Rakesh had an overdraft of 8,000 as shown by his cash book. Checks amounting to 2,000 had been paid in by him, but were not collected by the bank. He issued check of 800 which were not presented to the bank for payment. There was a debit in his passbook of 60 for interest and 100 for bank charges. Prepare bank reconciliation statement. So, dear learners, we prepared bank reconciliation statement with negative or unfavorable balance by putting it in negative column and made necessary adjustments in the cash book to reconcile cash book with passbook. Dear learners, before ending the session, let us have a quick recap of what we have learned today. We have learned about bank reconciliation statement and prepared bank reconciliation statement with favorable and unfavorable balances. That was the topic for today's sessions. I hope you all have understood it and enjoyed it a lot. Thank you so much.